Alright guys, welcome back to another episode on Optimal Trader Cycle, and today I am going to be giving you guys a breakdown on what is happening in the market, right? And currently I am on DXY, so we are going to look at the performance of DXY, and at the same time we are going to look at other markets like GU, USDJPY and gold. So if you guys have any pairs of mine that you want us to review or to analyze, please use the comment section to let us know. I will constantly be reviewing the comment section for you guys comment. Okay, so now to proceed, let's go to the weekly time frame. There are some things we need to watch out for on the weekly. You can see these are the old projections we have on DXY, and earlier, a few months ago, we had price approaching the support zone. This is a very strong support region. And if you look at the activities by the market, so let me just give you okay, hold on a second. So let me give you guys this outlook. I feel like this is going to be very interesting. Now look at this. Yeah, so we have this previous low and this previous high. So let's look at the Fibonacci retracement. Now this level seems to be our 61.8, this particular level right here. Okay, this particular level right here, and currently this is where the market is at the moment. Okay, market actually approached the level the second time. Now you guys see, this is the first time the market approached that level right here. This is the first time. You can see where the arrow is pointing at, and look at, this is the second time. Very interesting. The second time the market is approaching the 61.8 level. Now the first time market approached that level, we had a sharp reversal, which means the market quickly turned around from that particular level. Look at this right here. This is on the weekly time frame. So for about 4 weeks, we had market pushing back to the upside, creating a correction. Now you guys look at this ongoing trend. This is a downtrend which has been going on since earlier this year. Okay, since earlier this year, the market has been creating a downtrend. As you can see, this is on January. So this market started this trending to the downside from January, and up to this moment, the market is still trending to the downside. Now let's take a look at what happened last week candle, because I put more attention to the activities by the market participants. As you can see, we had a very strong bearish candle. Okay, the market seems to be influenced by the sellers all through the activities from last week, which is from Monday to Friday. So the market seems to be influenced by the sellers, as you can see. So what this implies is that we had more of selling pressure than the buying pressure. But now the sellers have seemed to approach a strong support, which is around 61.8. But one thing is that there is no level that can be broken, just like how this particular level right here was broken to the downside. Okay, now you can see we had a little rejection around here. This is because the little buying pressure around the support zone, around the 61.8 support zone, were trying their best to to come into the market and then to push market to the upside. But because of the huge selling pressure in the market, so the buyers couldn't have their chance to push market to the upside. But yeah, this is what we are seeing right now. So what we need to do now is also go down to the next lower time frame. But before we do that, we must also understand that here we are, this is a downtrend, and within a downtrend we have the swing high and the swing low, or lower highs and lower lows, something like this. So we have series of lower highs and lower lows, which makes up a downtrend. Okay, so we have the low, we have the high, we have the lower low, we have the lower high, we have the lower low. So these two characteristics are what makes up a downtrend. We also have the uptrend series, which is the series of high highs and high lows. But for a downtrend, we are going to be using lower highs and lower lows, because market is trending to the downside. It is depreciating in value. So now let's go to the daily time frame so we can see, at least we need to see exactly what is going on within this downtrend. The only takeout we can get from this market on the weekly is that price approach a strong support zone, and we also have last week showing us a very strong bearish candle, showing the amount of selling pressure in the market. Now, if sellers are really that strong, of course, this new week, because today is Sunday, so this is a new week, and this new week the market should also be influenced by the sellers. Okay, so now let's review what is going on the daily time frame. And now you can see here we have the daily time frame. As you can see, we have a clear downtrend. Okay, you can see we have a clear downtrend showing us the activities by the sellers. And right now, you can see this is the first time the market approached the support zone, which is the 61.8, and instantly price went further to the upside, creating a new lower high. Okay, as you can see, this is the region where price changed the character. It changed around and then went further to the downside. Now, in a downtrend, we have series of impulse and correction. I mean, however you want to view it, you can use lower highs and lower lows. It's also the same thing. So here we have the impulse, we have the correction, impulse, correction, impulse. So these are the two things that also makes up a downtrend. Okay, all of those things, they all work together, right? They all work together, and you need to also know how to apply them on your chart. Now, here we can see we have a correction, and if you're also in our trading community, you definitely know that every corrections must carry 3 waves. Okay, we need to have minimum of 3 waves. And if you guys are not on our trading channel on Telegram, I would urge you guys to join our trading channel. Okay, the link is going to be on the description, so you guys can actually join, and you're going to be getting a lot of tips, a lot of trading insight and opportunities as well. So, and at the same time, thank you for also joining our platform. Now you can see here, this is the next impulsive move. You can see impulsive move to the downside. Now let's observe, this is, every time frame has a current phase. Now, using the concept of the impulse and correction, these are cycles. Okay, a cycle must be completed before the next cycle begins. So here currently, this is the current phase because this is the corrective cycle. Okay, now with that being said, it means that this particular phase to the downside, this is the impulsive cycle. Okay, so this is the most active trend to the downside. You see what I've circled right now. Let's go down to the 4 hours, and you will see that this is the only trend that we are going to be seeing. We are going to be seeing a whole lot of downtrend because this market to the downside is giving us a downtrend. Although on the daily time frame, it seems to be an impulsive move, which is, it's actually the truth. Okay, this is an impulsive move, but right now you can see here we have a breakout of the support level on the daily, which means something. Okay, it means something. A breakout of the support level on the daily time frame, a daily candle closing below the support structure. And as you can see, we also have a Friday candle. As you can see, this is Friday candle right there. Okay, the Friday candle also retesting the structure and observing, I mean, this is just a retest, and by the time we go to the 4 hours time frame, we are going to see all those things very clearly. Now, all those details, all this information and data that we are gathering, all showing that there might be possible movement to the downside this week. Okay, but at the same time, we all need to wait for a precise confirmation before taking any action. Everything is all about confirmation in the market. You don't want to buy randomly or sell randomly, or buy from support and sell from resistance instantly like that. There is a level of confirmation you need to get from the market. So now let's go down to the 4 hours. All right, so this is on the 4 hours, and actually, if you guys remember, I said that this is the current phase of the market, which is the impulsive phase. And as you can see, this is now what we are getting at the moment. So this is the next impulsive phase. So if you guys are enjoying this whole analysis, please give us a thumbs up and also subscribe to our channel. So now let me give you guys a breakdown on what is going on. So let's clear all of those previous analysis. Now you guys can see here we have the impulsive move. Okay, we have an impulsive move. The old previous correction, look at it right here. This is the cycle that has been completed. Okay, you can see we have the wave one, we have wave one, wave two, wave three, wave four, and finally wave five. The minimum is actually 3, but already we have 5 waves, and right now the previous support structure got broken. Now you guys can see what actually went around here. We had the breakout of the structure, but was that a valid breakout? This was actually during a particular news event that made the market spike to the upside. But of course, what the market was just trying to tell us is that it is trying to make a major correction. Now let me just give you guys an example of what this major correction is. So here we have price heading to the downside. So I want you guys to listen to this carefully. So now you can see the market heading to the downside. What is this? This is a downtrend. But the moment whereby the market changes to the upside, now it may look like, oh, the market is changing direction from a downtrend to an uptrend. Okay, but it is not the case in the market. This is not all the time. But you can see the market now changing to the downside, okay, making the next impulsive move. So what happened to this particular breakout and the market turning around from here? What happened? Now, one thing is that we have the major and we have the minor. So here we have the major high, we have the major low, we have the major lower high, and then the market is trying to make the major lower low. Now, all of the activities within this major impulse, all of the small waves, these are just the minor ones, and it is going to be very they are going to be very visible on the next lower time frame, because of course by the time we go down to let's assume that this whole direction to the downside was observed on the 4 hours. Now by the time we go down to the 1 hour, you see all of this movement to the downside, which I'm circling right now. They are going to be very visible, and it might appear like this whole thing right here. So it means that every time frame has their own major waves or major direction. So we have the major and the minor. Now with that being said, you can see what is happening right here. Now okay, let's use this as an example. You can see this particular wave to the upside. This is a correction, but at the same time it is also an uptrend. So when this market was forming like this, of course, right from the higher time frame, we are going to know that the market is trying to make a major wave to the upside. Okay, you can see we have the major correction right here. We also have a major correction right here. Okay, so all of the direction within this, the minor, this is also a major impulse. We have the major correction, we have the major correction. Now the market is making a major impulse to the downside. Okay, usually if this is very confusing, you can use the higher time frame on, in this case, the daily. If I navigate back to the daily time frame, you will see all of those things. You can see we have the major impulse, major correction, and the major impulse. You can see. So this is how you're going to actually read the market, and trust me, if you can understand this whole concept, you are going to definitely understand every bit of the market. So market breaking out of this level wasn't a bad idea, but at the same time we should not take action because of the breakout. So there are things you need to watch out for before you take a trade. Now you can see here we have our impulse, correction, and we have the impulse, we have the correction, and now market is making the next impulsive move. Okay, so market is making the next impulsive move. Now we also need to, you can see here we have a previously we had a correction. Okay, I observed these activities last week, Monday stroke all through last week. I was observing the activities within this market, and I knew for sure that what the market was doing was giving us a correction. I remember I said every correction must give at least 3 waves, something like this, minimum of 3 actually. And here we have the wave 1, the wave 2, and the wave 3. So the market already completed 3 waves, and this is the next impulsive move. Now you can see this is the retest which we found on the daily. This is the retest activity on the 4 hours. But now this is now, yeah, you can see this is 61.8 level that we found on the daily and also on the weekly. So let's go to the 1 hour. So I'm very sure you guys are enjoying this whole analysis, but if you do, please give a thumbs up, and at the same time give us a subscribe to the channel. Okay, so you're also helping the community to grow. All right, so now you can see we have a correction. You can see we have a correction. Now, like I said, we need a three wave. Now this is a double bottom formation, right? This shows that a continuation move to the upside is probably going to happen, which actually did, right? But at the same time, okay, all of this move to the upside is also a correction, okay? Probably a retest of those broken structure. Now here we have the wave 1, wave 2, wave 3. This is the wave 4. Now the wave is still active, so we might still have price moving to the upside from wave 5. Okay, and once the wave is completed, so now our job as a trader is to always wait for the wave to be exhausted before we can jump into a trade for the next impulsive move. And as you can see, the same concept also applied here. Remember, I said everything we have in this particular cycle was a correction, where we had this as the wave 1, we have the wave 2, we have the wave 3. Okay, in fact, this is wave 1, wave 2, and wave 3. Everything right there was the wave 3, just as how we identified them on the 4 hours time frame. But if you look at this, we have a double top formation right here and a structure right here. Okay, this is more like a ranging market. But at the same time, we also have the wave 1, wave 2, wave 3, and then price went further to the downside. So picking your entry at the breakout of this level was going to be a good idea. As you can see, price went further to the downside. Okay, so this is the observation we have on DXY, and if this is going to happen on DXY, it might probably mean that USDJPY, USD CAD, stuff like that, USD on the base currency might appreciate in value, but we need to wait for the right opportunity, the right entry. So if you guys don't want to miss on all of this analysis or any future analysis that we have, please do join our Telegram channel so you won't miss all this information. All right, so now let's go on to the next pair, which is in this case USDJPY. So this is USDJPY, and currently I'm on the weekly time frame. Now, one thing I would want to put your attention to on the weekly time frame is to look at the overall directional bias of the weekly. As you can see that the market is actually on an uptrend, so which means that the buyers on the long-term time frame, the buyers are in control, right? And at the same time, you know, if you are in my trading community, you will get to understand the types of corrections that we have. And as you can see here, we have an impulsive move, we have the corrective move, we also have an impulsive move, and this is initially the correction. But as you can see, you know, after every correction, right, we have 3 waves like this. Remember I said that the minimum wave for a correction is 3. Now, once price has broken through the corrective phase, then we are ready to make an upward movement, which is the next impulsive move, impulsive wave, right? Now, look at what happened on in this case. The market couldn't break the previous high, and instead it actually reversed from there. So now this is actually what we call an extended correction, because initially the market was meant to break above this resistance structure, as you can see. But unfortunately, the market couldn't break it because the buying pressure in the market has reduced. And as you can see, the market turned around to the downside, making the extended wave. Now, instead of within this particular correction, there is a 3 wave within it. We might not be able to see it on this time frame, but if we navigate down to the daily time frame, we are going to see all of those waves within the movement. But right now, we are going to pick everything here as one, which is the wave 1, and this is the wave 2, and this particular movement to the downside is the wave 3. So as you can see, from a simple perspective, a simple correction right here, and then the market turned to a complex correction right here. Okay, so this is the reason why we always try to understand the phase of the market. If it is a corrective phase, we know for sure that there are 2 types that the market can do. Okay, and as you can see, this is another example of a simple correction. Okay, this correction right here has already done 3 waves, and like I said earlier, if you are unable to identify the waves within those movements, you can navigate down to the next lower time frame. I think this is the reason why we are always working with multiple time frames. Okay, so once you are unable to see the waves within the movement, then you should navigate down to the next lower time frame. So in this case now, if I want to see the wave in this movement, I would need to go down to the daily time frame. Okay, because currently I am on the weekly. Now you can see, like I said, this is the wave 1, and we have the wave 2, and this is the wave 3. So currently the market is making this wave 3 to the downside. And one thing is that you can see how price respected this support structure. Now it seems that the market is trying to approach this support structure, but we are not sure if the market will break through to the downside or price respect it and then move further to the upside. If price does the same thing, then it means that this whole correction has actually ended. Once market breaks this resistance structure, then it has ended. Now this is what we call a descending triangle, okay, or we can also call it the symmetrical triangle, because this is in form of trend, you can see, to the upside. So we can also call it a symmetrical triangle. And at the same time, price could also break through to the downside. If price breaks through to the downside, the market direction has not changed. The reason is because this previous high wasn't taken out. Okay, resistance structure was not broken, so it means that everything right here, wave 1, wave 2, wave 3, is still active, and it can go further by breaking the support structure, and then you can still see price going further to the upside. So it is still active. So if price breaks through the support structure, okay, the correction is still active, and the trend is still ongoing. Okay, it has not changed. Now let's pay our attention to the previous week candle. As you can see, we had a little rejection, right? Price was influenced by the sellers, but initially you can see that this is where the sellers pushed the market to, before the buyers actually came into the market and pushed the market further to the upside. So now what we need to do now, in order to understand what is really going on in the market, is to go down to the next lower time frame. And in this case, I'll be going down to the daily time frame. So you guys can see how we are gathering all our information right from the weekly time frame to the daily, from the daily to the 4 hours to the 1 hour. This is exactly what we do, right, in order to understand price movement. Because before you place a buy or before you place a sell, there must be a reason. Okay, there must be a reason why you want to do all of those activities. Now you can see this is actually the daily time frame, and as you can see, just like the DXY, that it has been moving to the downside since the beginning of this year. The same thing already with the USDJPY. You can see this is actually from the weekly. Sorry about that. All right, so this is from the earlier this year, which is from January. Okay, price has been on a downtrend since the beginning of this year, as you can see. So now we have our impulse correction. We have this impulsive move, and this is a corrective move. Now price is making the next impulsive move to the downside. Okay, very interesting. Price is actually making the next wave, next impulsive phase to the downside, and we already recognize that this is actually a correction. But of course, the correction is still active because this is the previous low of the correction. Okay, if I bring this out, let me bring this particular movement outside so you guys can understand all those things. Now you can see right here. Okay, now you can see what actually went wrong right here. Now price, this is the previous low structure. Okay, we have the previous low structure. So here we have the wave 1 to the upside, wave 2, and the wave 3, the wave 4. This is the 5th wave. Now this previous low structure is still yet to be broken, so which means that the corrective phase is still very much active. Okay, the corrective phase is still very much active, so we can't do anything at the moment until we see a breakout of the structure to the downside, and then we can look for trading opportunities. But of course, this is the daily time frame, and this is a long time frame. Okay, so which means we can still find trading opportunities from this high for market to come down to this low. So it means that if price is in the corrective phase, you can still take advantage of this correction on the lower time frame. The reason is because now let's go back to the chart. Now the reason is because if you look at this particular movement to the upside, this movement to the upside, when we go back to the 1 hour time frame, you see this that I've circled. It is going to be a whole long uptrend. You're going to see the trend going further to the upside like this. It's going to be very, very visible, right? So this is the reason why I said, you know, when price is in the corrective phase on the higher time frame, you can of course take advantage of those movements on the lower time frame. Now you can see right here, I just need to mark out the previous high, which I already did, the previous high, and this is the previous low right here. So you can see price respected the support level, but sooner it might actually break because this is the impulse, and you can see we have the wave 1, the wave 2, and wave 3. Price can still go further to the downside to form the next impulsive move right here. Everything right here, don't forget, everything right here is impulse, but we can't validate this impulse because this previous low right here has not been broken. So we need to wait for the breakout before we can say that this is a valid impulsive phase. But with what is happening in the market right now, I mean, there is no reason why price will give us a continuation formation at a support level, something like this. Why would the market give us a continuation formation at a support level? It's because the market actually had the intention of breaking further to the downside like this. This is the reason why we have a continuation formation. If the market was going to move further to the upside, I mean, we should have something like this, probably inverse head and shoulder formation like this, and this will mean that price will go further to the upside. This is actually a reversal formation. If you guys are familiar with your chart formation, of course this is going to be very, very clear for you. Now let's go down to the 4 hours so we can see this is the current phase. Okay, this right here is the current phase, so we need to understand what is going on right here. So let's go down to the 4 hours. Now on the 4 hours, you can see we now have a clear movement. Here we have the impulse, and I said this is the correction, and I also said that this is the wave 1, the wave 2, and the wave 3. This is the wave 3 that the market is actually making at the moment. Now you can see how price respected this resistance zone. The market couldn't break this resistance zone after giving us this bullish impulse, and this is the correction. Okay, you can see it didn't actually break further to the upside. Now furthermore, the market broke to the downside, and we can also recognize this as a double top because the market reacted around this resistance zone. This is the first activity, and this is the second activity. So the market couldn't break further. It's actually threw out a rejection, so whereby the buyers tried to break out to the upside, but the sellers came into the market and they rejected the seller. They rejected the buyers to the downside, right? As you can see, furthermore, we had a break of the support structure to the downside, and you can see how price is making a correction. Okay, this is a correction. So in my own opinion, this may be the impulse, the correction, and the next impulse to the downside may actually occur. But at the same time, this is a double bottom formation. Okay, and of course we had a break of this resistance structure. Usually the way I trade my own double top or double bottom formation is I would need to wait for a break of the neckline, but I won't place a buy from the neckline. Okay, because the previous low structure, which is this one right here, was not taken out. So this could now mean a wave 1, wave 2, and wave 3, and then before you know it, the market can actually go further to the downside. So if you had placed a buy from here, you would have actually been on the wrong side of the market. So instead, I would wait for a continuation move like this that will lead price further to the upside. Now this is exactly what the market is doing. We had a double bottom formation right here, as you can see, and then price broke above the neckline, and then we have the wave 1, the wave 2, wave 3. Okay, now price can still of course go further to the upside, making the next impulsive move. So this is the reason why sometimes before you place a buy or a sell, there must be a reason. Okay, there must be some valid confirmation. Now let's go to the 1 hour time frame. Okay, so now on the 1 hour time frame, as you can see, we now have a clearer picture. As you can see, on the 4 hours, on the 1 hour, we actually had a break of this resistance structure, but that was actually not a valid breakout, because of course on the 4 hours was actually a rejection. Okay, it was actually a rejection, so we couldn't take that. Now, like I said, that this is the previous double bottom neckline, and here we have the wave 1, the wave 2, and the wave 3. So if I'm going to take this trade, you can see here we have the break of this particular structure. So what I'm going to do is that I'm going to wait for this market also is giving us a correction. Okay, if at all the market is going to continue going further to the upside, then this is actually a valid confirmation. Okay, as you can see, we are the breakout of the structure. So I think what I'm going to do is that let me mark out this level. You can see previous resistance, which is now a support level. So what I'm trying to say is that this is actually the wave 1, the wave 2, wave 3. Okay, now this wave 3 has been completed. The reason is because this previous high structure was broken, and this might mean that we are ready to go further to the upside. Okay, but this is the reason why we always need to be extremely careful and at the same time wait for confirmation. So if I see a break further to the upside, I am going to place a buy. Okay, I'm going to place a buy, but at the same time the next target level would be this level right here, because we need to break above this. This resistance level was a level that the market got rejected on the 4 hours. So if we see a valid breakout to the upside, then it is actually a good reason for price to continue the wave further to the upside. Now let's go to the 30 minutes so we can see exactly what is happening within this correction. Now you can see right here. Now you can see on this correction, we already have the 3 wave. We have wave 1, wave 2, wave 3, and then price could still go further to the upside. But all of those movements could be just short movements, because on the 4 hours, you can see right here, on the 4 hours, here we have the wave 1, the wave 2, wave 3, wave 4, and the wave 5. So it means that this movement to the upside, everything is just a correction. Okay, every of those movements is just a correction. So like I said, on the higher time frame, you can actually take advantage of this correction as long as you spotted the correction on the higher time frame. As you can see right here on the daily, we have the same wave 1, the wave 2, the wave 3, and the wave 4. So you might expect the wave 5 to the upside, and once the wave has been completed, we can actually find the next impulsive move to the downside. So you can see this is actually very, very clear. Like I said earlier, I said that this correction right here, this is a correction, right? And we have the wave 1, wave 2, wave 3, wave 4, and wave 5. Now this is meant to be, you can see how long this particular wave 5 is. We can compare it with all other waves like this. We can compare them. Okay, so this shows that we had a lot of selling activities, and right here the market is printing out a continuation formation. But this continuation formation on the lower time frame is still very, very much active. As you can see, this is actually on the 4 hours time frame, and like I said, this is the wave 1, the wave 2, and the wave 3. So right here we just need to see the market going further a little to the upside, and then we can take advantage of the next impulsive move. So this is the reason why we always need to work with multiple time frames. So if you guys don't want to miss out on this analysis that we are going to have in future, and the trading opportunities that we are going to also be releasing, do make sure to join our Telegram channel. The link is also going to be in the description, and also it is going to be on the comment section. So if you guys have any pair you want us to analyze, also let us know on the comment section. Okay, so this is all we have for you on USDJPY. Okay, like I said, we are going to be waiting because price has broken through the previous high, which is now a support, previous resistance right here, which is now a support right here. So it may confirm more continuity to the upside. Okay, so I would want you guys to watch out on this market, and I would also do the same myself. So if you guys have any question, do let us know. and this is where we are going to be stopping today. On our next video, I'm going to be showing you more detailed analysis on GBP, USD, and on gold. So thank you very much. If you love this video, please subscribe and give us a like. Thank you very much, and stay safe, guys.